Good evening, everybody. Welcome to #GotMoney. I'm Elizabeth Jackson. It's tax time, people. It's here. It's finally upon us. And boy, I'm just super excited about it. I can't tell you, I am jumping out of my skin. Welcome to #GotMoney. Ross, thank you for joining me.
Oh, you're welcome. Thank you very much.
It's really interesting. Finding an accountant on the 30th of June is a bit like finding a unicorn, isn't it?
It's an interesting time because it is because we're going into the tax season. We've literally just finished last year's taxes, so 2019 accounts have pretty much been finished and sent out. We've had a lot of delays with, COVID-19 and businesses requiring a lot of assistance lately. So yeah, it's an interesting time.
So you finished off 19. You're digging into just
as in last week. We sent out the majority of our accounts. So wow, the stragglers, I should say.
The stragglers. I am. I admit to being one of those stragglers myself. So let's dig in. What are you noticing around COVID and how people are? What are the questions that people are most asking you in this environment when it comes to tax time?
So at the moment, the majority of people who are working from home, they want to know what they can claim as a home or work-related deduction from home. So because they're either not allowed to go into the office or they've chosen to work from home, they're incurring a hell of a lot more expenses. In terms of water, gas, electricity, and everything by working from home. So probably a lot of your listeners or viewers have seen a big increase in those expenses.
So can you get a deduction through your heating with your gas and your heating, and how does that work? Or is it just a portion of percentage of that we can claim and our internet costs and those expenses?
So the ATO have released basically a COVID-19 home office expense. And what that allows you to do is claim 80 cents per hour that you work from home. It's sneaky in the way they've done it, is that they've incorporated a lot of expenses in this 80 cent per hour allowance, basically. And what that means is that 80 cents per hour is for some home phone, your home internet, water, gas, electricity, and things like that. And that's fine if you don't really want to calculate or try and diarise those expenses. And all you have to do is just try and justify either via your roster or your normal hours working from home, and just multiply that by 80 cents. But that is what they call the shortcut method. That shortcut method only started from the 1st of March. So from the 1st of March,
the 80 cents, Ross, sounds really weak. 80 cents an hour sounds weak. Yep. I'm sitting here at my desk 8-9 hours a day, just giving it large, pushing that barrel. And I can tell you what, I'm not sitting here freezing. So is there a way that they can actually support a claim that's actually relevant to the costs of working from home? Because 80 cents an hour is not it. Unless we're in the Ukraine. And
No, I agree. So look, that's a new thing, and as I sort of said before, it is a little bit sneaky the way they've done it.
Tiny bit, do you think?
Yeah, a little bit. Just by the way they've incorporated everything. So the other way you can do it is there's 3 methods in home office. So there's the 80 cent rule, there's the 52 cent rule, and that doesn't include home phone and internet. So you can still claim 52 cents per hour plus the work use percentage of your home phone and internet. Okay, so that can be a little bit better claim depending on how much you're using those expenses for. Then the third method and the final method, and one that might be a bit more relevant to your listeners and your viewers, is the actual expenses method, where you calculate your home space or your home office space as relative to your entire space. And then you multiply that percentage. So it might be, say, 10% of your home is your home office. And then you multiply that percentage by your water, gas, electricity bills and those things like that. And there's a really, really good calculator on the ATO website about home office expenses and actual methods. And so they're the 3 methods that we use.
Is there an issue in doing that third option when you go to sell your house?
There can be capital gains tax if you decide you wanted to claim capital expenses. So capital expenses are things like your interest on your mortgage and your council rates and things like that. Whereas if you just claim running expenses, so the actual consumables, not capital expenses, then that capital gains tax is none.
Okay. Oh, that's good to know. I couldn't imagine it'd be a dreadful thing to come at the other end of this and get slagged at somewhere else. Okay, so this is one of the questions. Can I claim for my rental mortgage, and will this affect my capital gains tax if I sell my house? Great, so we've dug into that. I claim my car-related expenses using the logbook method. Will I need to keep a new logbook for an updated representative period of private and business usage during COVID-19?
That's actually a really good question. So the logbook method is a 12-week average of your work-related business use of the car. Now, that's meant to be an average. So if you are using your car less or more, then the ATO do require you to update that logbook. Yes.
As a real estate agent, we kind of just go for the lot. Can you just do that still? Can you just,
No.
if you're, no.
No. So, no. So if you are, basically there are two methods. There's the cent per kilometre method, where you can claim a maximum of 5,000 kilometres.
Yeah.
And that requires you to say, okay, I've gone from Croydon to Ringwood, and I've done that 3 times throughout the year, or diarise or do a little a notation. The only other method is the logbook method, where you keep a 12-week logbook, and that details every single trip for both business and personal. And then you get to claim that work use percentage across all of your motor vehicle expenses. So
there are apps for that now too, aren't there? You don't have to just.
Yeah, there's some wonderful apps. Absolutely wonderful.
Get the app, people. I know.
Well,
I'm getting it.
Very important, actually, is to make sure that the app that you have is authorised by the ATO. Now, there's one logbook app that has its own ATO product rule, and that's actually very, very important, because it means it's been reviewed and authorised by the tax office as a legitimate record keeping device.
Oh God, that's a good one to note. Thank you, Ross. That's an excellent idea. I'll go and find it. Now, here's one: medical levy surcharge. If I suspended my private health insurance due to losing my job, and my income for the Medicare levy surcharge purpose is above the threshold, will I be liable for the Medicare, the MLS, whatever that is?
Yeah, so Medicare levy surcharge, absolutely. So if your taxable income is above the threshold, you will be, and you haven't got private health insurance, and the surcharge is actually quite important. It's based on the number of days that you weren't covered appropriately. So if you had private health insurance for 3 months, you don't pay the surcharge for those 3 months.
What's the cap? What's the base income threshold for that?
90 grand per person, or 180 grand per couple, plus $1,500 per child after the first child. So your first child, it doesn't count towards the cap. Your second child has $1,500 on top.
Okay.
So if you have 2 kids and you're a couple, then it'd be 181,500.
That you have to earn as a combined income, and then on top of that, once you go over that threshold, you have to pay your Medicare surcharge levy.
Correct,
okay.
Correct.
The interesting thing about COVID is a lot of people's income has actually gone down. So.
Yeah, and that's right. And so the people that have cancelled their private health insurance, if they're under that cap, they won't pay a surcharge.
By the way, everyone, I'm reading from the ATO website, and the reason why I'm doing that is I know that there are a lot of questions that people have that I just don't have in my head. So I've come to the guru, the ATO, to ask them. If I use a shortcut method to claim my expenses while I work from home, what records do I need to keep?
So you need to keep either a diary record, you need to keep your maybe a copy of your roster, so that proves that you were actually at home that time. Any other records that can prove that you were working at home. So it could be things like emails or computer records, log-on records, but the best is a diary.
What about people that are self-employed? Because we don't have rosters. We kind of just get in there and dig in. Do we still need to capitulate to doing that? Is that a smart
It
thing
is
to do?
it is always best to keep a diary or a record. In some home office expenses, so that 52 cents or the actual expense method, you only need to keep a representative period. So 4 weeks is what the ATO recommend you keep your diary at. However, getting back to them being that little bit sneaky is that in this 80-cent rule, they haven't mentioned anything about time frame of diary. So they just said you need to be able to prove if you're using the shortcut 80-cent method throughout the entire period that you're working from home. So they haven't actually specified that it needs to be a 4-week diary, where the other 2 methods is a 4-week diary. So,
Good Lord.
yeah.
I better start keeping a diary. Can I claim working expenses when I'm on leave if I've been stood down during the COVID-19 period?
So any work-related expenses, you have to actually have the connection or the nexus between your income earning and the expense. So if you're not earning any income, you've been stood down, then it is very unlikely you'll satisfy the nexus.
I do like that question though. I must say, good on you for giving it a go. I have lost my job as a result of COVID-19 and have found another job. Will I be taxed at a higher rate because it's considered a second job?
So if you're receiving a JobKeeper payment and you've gone and got another job, it's not so much that you'll be taxed at a higher rate, because the tax rate is staggered. So if you're earning under $80,000 or $90,000 actually, your tax rate's 34.5%. So whether you've got 2 jobs or 1 job, if you're earning say under 90,000, then you're going to be at the same tax rate. But what happens is, because you're not claiming, you probably shouldn't claim the tax-free threshold on your second job. And it's not that you're taxed at a higher rate. It's more that you're not claiming that tax-free threshold on the second job. You're always taxed at the same rate. So it's 34.5% as an example. It's just you're not claiming the tax-free threshold on your second job.
Not an Australian resident or temporary in Australia. I'm not an Australian resident. I'm staying in Australia for longer than I expected because of COVID. What are my Australian tax obligations?
If you're earning taxable income in Australia and you're not an Australian resident, you still have to lodge a tax return, and that is taxed at foreign tax resident rates. And,
what's that?
Basically, you don't get a tax-free threshold, and the first 30 grand is about 30% or something along those lines. It's a non-resident rate. Yeah.
Okay.
Yeah. So there's no tax-free threshold. It's quite expensive and quite costly. However, if you're a visa or a working holiday maker, you get a flat 15% rate. So it is a better. If you are working as a foreign resident, see if you can get that holiday makers or the I think it's 453 visa rate.
When I first came to Australia, when I was very, very young, we were allowed to, because we were paying tax at the full rate over a 12-month period. But if we stayed for 6 months, we were allowed to make a claim back to the Australian government for a tax refund. Is that still allowed?
Yeah. If you have had with tax withheld in Australia, you can still claim, you can still lodge a tax return, and if you've been overtaxed, you will be entitled to that as a refund.
Okay, good. Will my tax residency for tax purposes change as a result of me returning to Australia during COVID-19?
That will depend on everybody's individual circumstance, and it will depend on multiple factors: how many days you've been in here, where you consider your tax residency, if you've been a tax resident of Australia before. Any sort of residency questions is very specific to the individual.
And also just speak to your accountant.
Yeah, exactly. Yeah, and even then, sometimes they are so complicated that you need a private binding ruling with the tax office, and that let them make a decision.
A private binding ruling with the tax office? Oh
Yeah,
my
yeah, so,
God, I didn't know they
yes.
existed.
Well, they're actually a wonderful thing. It's a little bit complicated, but it is a wonderful little service that they provide, because if you're not sure, you can actually go to them and say, look, I'm really not sure. Here's my circumstances, here's my situation, here's all the facts, and then they make a determination for you, and that's free of charge.
Oh, that's good,
So
actually. That's
yeah,
very
it's a
nice. It's
wonderful little
warm.
service. Yeah,
It's a warm
and
service.
and providing that what your circumstances are and what they've made the decision on, their ruling is binding, so they can't go and change it down the track unless those facts are different. So
Unless you
have
give
good
them the wrong
confidence.
information.
Correct. So providing your information is correct and they've made the decision on that information, then it's a really good service and it's binding. So
Great. So, but I guess the rule is don't ever be dishonest to the Australian Taxation Office under any circumstances. Holy God.
they'll find out. They'll find out.
Absolutely. I work in a space where a lot of people don't pay a lot of tax. I do a lot of first-time home buyer space. And what people don't realize is that when you look at avenues and ways not to pay tax, you're actually getting in the way of your ability to purchase real estate.
Yeah.
And it just seems counterintuitive. Pay your tax, enjoy doing it, and then you can get credit so you can buy property, so you can continue to create wealth. What happens if I earn employment income that is salary and wages from continuing my foreign employment, working remotely while I'm in Australia temporarily?
Well, so that's going to be depending on where the employer is employing you from. So if they're employing you from another country, but you're working in Australia, you might not necessarily be earning Australian income. You might, but again, you might not. So it just depends on
Where they pay to, doesn't it? If it's paid in the country of origin.
Yep, that's exactly right.
Okay.
And getting back to your point about taxable income, that's actually a really good point, because banks are, in our experience at the moment, they're really only lending on taxable income, lodged tax returns, notices of assessment, and things like that. So the higher your taxable income, the more you're able to finance, and the more the banks will look at you. And at the moment, that's a 2-year process. So a lot of banks, not all, but a lot of banks are requiring 2 good financial years, not just 1. So that's something for your listeners as well.
Yeah, absolutely. I get people and as soon as you go into ABN, God love you for doing so. I think there's something really wonderful about that entrepreneurial spirit. But you've got to write a good game for 2 years before you can come and see any of us for borrowing. And it might seem like a long time, but it soon goes. We reversed engineered it. When we found our first investment property, we had a meeting with my accountant and my lender, and we went through, okay, we're looking at buying a property. Where does our income need to be? Right now, what is our income looking at, and what would that give us in the way of borrowing? And if you're interested in purchasing a home, please have those specialists around you so you can start getting reverse engineer how you look at real estate. People find the house, look at it and go, this is wonderful, and then try and buy it. Don't do it that way. That'll get you into a whole heap of trouble.
There you go.
So any tips or tricks? I don't know if you can use the word tricks with an accountant.
There's no tricks with the ATO.
There isn't really, is there? Anything that people need to be considering right now as they're going in and they're finalising their end of financial year, other than the landscape of COVID?
So making sure that they're maximising their work-related deductions, that's actually really important. And what I'm seeing a little bit lately as well, and this is probably something for your viewers, is a lot of the times a GoFundMe page or a GoFundMe donation is not a tax-deductible donation. And that's actually really, really important, is that if you are going to, or if you do want to make a tax-deductible donation, it has to be a registered tax-deductible gift recipient. So a registered charity with tax-deductible gift recipient status. So a lot of the times these GoFundMe pages, they're not a registered gift recipient and you can't claim them. And I'm having a lot of that, not difficulty with clients, but trying to educate them that, your meaning is beautiful, and what you're trying to help with is wonderful, but a lot of the time it's not tax deductible.
What about those that have investment properties that have basically been left empty? What's happening to them inside of their taxation with their property portfolio? Are they allowed to write that all off?
So any expenses, so the main rule and the main things that your viewers have to understand is that the rental property must be available to rent. So it must be commercially available, and you must be doing everything in your power to rent that. Now, whether that's with an agent, and that's pretty much the best way, is to try and get it rented as much as possible. And even if it's not, that's fine. Providing you've done everything possible to rent it, all of those expenses are still deductible. So your water rates, your council rates, your interest on the loan, land tax payments, anything to do with the rental property, pest control, repairing the property. All of those are still deductible, absolutely, providing you have done everything in your power to rent the property out.
Oh, well, that's good to know. We do. I know that a lot of particularly within our community, a lot of people are property owners, and the biggest concern, and investment property owners, and the biggest concern for them is tenants have either not been paying rent, or they've been unable to find a tenant due to COVID.
Yeah.
Anything else any tips or tricks that you want to leave our listeners with before I send you back into Near Miracle Land?
So the other thing is
calculator.
Especially, the ATO calculator, especially in Victoria, land tax has gone up quite significantly. And if you've had an agreement with your tenant to provide provide rent relief, you could be, and you have to register it with the state government of Victoria and probably other state governments, you could be entitled to a land tax relief, a land tax relief amount. So that could be a saving quite significant, but again, it's depending on each person's individual circumstances.
I found out yesterday that companies are allowed to apply for $10,000 as COVID relief. Is that still the case?
So in Victoria, that $10,000 is business specific, but it finished on the applications finished on the 31st of May. So that was about last month.
Are they doing it the other side of COVID as well?
I haven't seen any announcements as yet, but what's happening is that there's actually a lot of different 10,000 amounts. So there's a cash flow boost, which is another 10,000 from the federal government, and that's when you only employ people. So if you employ people, even if it's only yourself as an employee in your own company, so you've only got one employee, the ATO will give you, or the federal government will give you a $10,000 cash flow boost. That is coming again because that happened in Q3 of the March BAS that everyone lodged in, say, April or May. And you should have, if you've lodged that and you've had wages withheld and PAYG withheld, then the ATO should have given you a minimum $10,000 cash boost. Yes, that is coming again soon.
That's good. We don't have that for sole traders, though. Nothing lovely and gorgeous like that for sole traders.
Well, sole traders that employ people, so if they have one apprentice or another employee, then yes, that was entitled to them. But if it was just them, then you're right, that $10,000 wasn't applicable to them. But then they could have qualified for JobKeeper. So if they'd experienced a 30% reduction in their turnover, then they could have applied for JobKeeper, which is the $1,500 a fortnight.
So talk to me about JobKeeper. How does that work?
That's yeah. So basically, look, they needed to do something, and this is what they thought of.
Oh God, I almost feel like we should be playing intense background music. Tell me how this is bad.
Well, it worked for certain industries amazingly well. Okay, so for the hospitality industry, it was an absolute godsend, and it saved a lot of businesses, and a lot of our businesses are cafes and restaurants and in the hospitality industry. And so from that point of view, it was wonderful. It was genuinely a wonderful a process for people to keep people employed, keep themselves employed, and go from there. But there are other industries that maybe didn't experience such a significant downturn as other industries, and it's cost this country a lot of money.
They've just put their hands up and said, yeah, we'll take some of that. Thanks very much for coming.
Well, they still had to qualify. So, but the thing is, they only had to qualify for 1 month. And if they had a downturn in a month, then they would qualify, pretty much until it's finished. So you could have had, 6 amazing months, 1 bad month, and you've still qualified.
Oh my God. So people are still producing money and getting job keepers. That's what you're saying.
In certain industries and in certain circumstances, there are some people that have done really, really well. Absolutely.
Why would people take job keepers if their companies are doing well? I'm sorry. I find this really difficult to fathom.
Because the way it was set up is that if you had a 30% or more decrease in your revenue, then you were eligible. And and businesses that have $750 a week or $1,500 a fortnight per person paid for, that's money they don't have to pay for, obviously. So
I've heard of people that were casually employed doing really well as a consequence of job keepers. That I knew about that. I just find it unconscionable that anyone that's company is doing well or business is doing well would actually go and take that out of the Australian coppers. That's immoral.
So you could only register if you had experienced that downturn. So you had to have qualified first and foremost. But what I'm saying is that if you had a really good 6 months prior to that, and then you had 1 bad month, and then it picked up the month after, you were still eligible in that bad month. So if you qualified, you were eligible. It's as simple as that. That's the way they made it.
Are they going to extend it past September, do you think, or do you think September's going to come around? They're going to knock it on the head?
Yeah, it's interesting. There's been a little bit of talk, around the traps about cutting it short before September for certain industries. And maybe extending it for other industries past September, but I think the majority will be finished in September. But yeah, either side, I think it's going to be industry dependent. So getting back to the hospitality industry as an example, I get a feeling, and I genuinely don't know, but I get a feeling that they might extend that industry JobKeeper after September. And then things like childcare. So they're talking about, the childcare industry, they're talking about stopping it before September. Now they haven't done that yet, but that's the sort of whispers in the wings. But I think majority of industries, will be finished in September.
Thank you for joining me, for coming on the show. I really appreciate it. And thanks for putting up with my appalling question asking skills. I normally just let it run, but what I realized was I don't know enough about taxation to even wing it on behalf of my audience. So I went to the ATO website. If you are looking for guidance with your taxation, how do our clients or how do our listeners find you?
Well, we've got our website, gbdaccountants.com.au, and that's got all of our contact details on there for us. So yeah, give me a buzz and we can have a chat.
Fantastic. Thank you so much. I hope you're all well out there, everyone. Thank you for listening to us and for putting up with my terrible questions during today's show. Please, if you miss any of our shows, go to our podcast or go to our website, gmtv.com.au. Take care, everyone, and be safe and well.